Washington's clear-thinking headquarters. The Morning Majority, 5 to 9 on 630 WMAL.
8:37 on WMAL. Brian Neiman, Michael Steele, former head of the RNC, former Lieutenant Governor of Maryland, of course.
Yep.
We're joined now by Tobin Smith, Fox business analyst, author of the book ChangeWave Investing. Morning, Tobin. How are you?
I'm outstanding, man. It sounds like Steele can't hold a job. I'm a little confused.
He can hold several jobs at once, I think, actually.
I can multitask, bro. What you talking about?
He is a multitasker. How you doing, Michael?
I'm great, man. How are you doing?
I'm outstanding. I don't know if it's just a 5-minute segment because we'll probably blow it just messing around. So let's go.
All right. So this week, S&P says, it's still AAA bond rating, but it's down from stable to negative. Everyone like, oh my God. And all of a sudden, 2 days later, we're at collapse levels at the market. So is everything hunky-dory again in the world?
Well, everything's not hunky-dory, but, I mean, the S&P telling someone that perhaps their house is not in order. This is from the vaunted group that placed the AAA ratings on mortgage bonds, the vaunted group that came out and said about 6 months before Spain collapsed that their bond ratings are AAA. So I think this is more a reaction. I mean, the positive news, if you will, the positive reaction, is the fact that S&P has been so far behind the game they really have no credibility. That being said, if you were to look at the new freshmen on the Hill who have decided that they're going to not approve a debt ceiling increase, if they really understood that if we defaulted one iota, in other words, missed one payment on any of our bonds, that every bank that held those then would have to reclassify them as an unperforming loan, which would make Lehman Brothers collapse look like a tea party. That, pardon the pun, that is. That's the reality that I think the market understands, is that A, we're going to pass this, and B, regardless of where you stand on the tax cut and deficit and everything else, to sort of jimmy jack around with the debt ceiling is a serious issue.
So, Toby, this is in many respects, then, based on what you've just said, very much like the 2011 budget we just went through, the $38 billion that became $358 million. In that that's not the real fight. I mean, the real fight is the further down the road piece that we have to look at. So you have to pass the 2011 budget before you get to 2012. Oops, you got to pass the debt ceiling. You got to increase the debt ceiling before you get to 2012. Once you do those two things, does that then put into clearer perspective what the 2012 budget and beyond that fight is all about?
Well, you use the word clear perspective, Michael, and that is a word I've actually never heard used or applied to any of these issues, because the reality is that, I am actually so tired of actually saying on Fox that, well, gosh, remember that we're fighting over discretionary spending, which represents 18% of the whole entire donut. So let's take the discretionary spending and take it to zero, and then look where we stand. And if you do the big math, then you find out we're nowhere close. We're not even a spit in the ocean to the deficit issue. So if a clear perspective is that we have no way to fund Medicare the way it's currently structured, and Social Security is savable simply by doing some math changes with age, et cetera.
Right.
If that's a clear perspective, Michael, if that's what we come out with, then I will be happy. And more than that, I think the stock market will be happy, and the bond market will be happy. So that's what I call clear perspective, is an actual identification, and not when you say the word Medicare restructuring that it's like the stink bugs when you take the rock out of your backyard and everybody runs, to the corner.
Right. Well, you look, that is one of the big stink bugs that have got to be dealt with is the entitlements in connection with defense spending, in connection with a host of other things. Do you think these guys really have the moxie to get it done? I mean, I know Wall Street and a lot of the particularly bondholders out there sitting there going, so what's gold up to now? It's a very
Michael, that is a fantastic way to describe, because gold, remember, you and I are old enough to remember that, gold used to be an inflation hedge. Well, gold is not an inflation hedge, ladies and gentlemen. Gold is a currency proxy. And if you're in various parts of the world, for instance, I was in Iran last year in business. When you meet Iranian business people and you look at what they have in terms of cash versus other stuff, they hold about 70 to 80% of all their assets in gold. Why? Because they can get money for it tomorrow. And the government can't come in and take it away from them. If you multiply that experience around the world, China just allowed their citizens to own gold. Your gold has become a currency. So if we're not going to deal with the structural fundamental math that does not work for Medicare, and we're going to run a government, or going to run our system based on borrowing 40% of everything we spend, it does not take a rocket science nor a PhD in economics for people to say, I need a substitute currency for the dollar, and guess what?
It's gold.
All right, quickly, gold. Gas prices, are these crude oil prices here to stay, or do you think that there could be some, perhaps easing as far as crude goes in the next couple of months?
Well, I think everybody recognizes that from a fundamental standpoint, you price any commodity at the marginal cost, which means what's the most expensive oil to pull out of the ground and put some profit on it, and that's where the fundamental value is, and that puts us at about $80 to $85. It costs $65 to pull oil out of these deep water wells. That's where all the new oil has come from. So that's the fundamentals. The extra price in there is, of course, fear. I would say if you want to go back and look where oil prices could be without Middle East issues, go back to where they were before Iraq. We always say we went over there to protect oil. Well, we did not do a very good job of that, I guess.
It blew up in our face, that's for sure.
Yeah, exactly. So we'll come back to $85, $80 to $90 range as the fear gets out. But frankly, I'm not a good soothsayer on when the people in the Middle East are going to decide to go back to Kumbaya.
Who knows when the fear is
in other words, $3 gas is here to stay.
Well, the $3, I'd take it at this point.
But by the way, for all the drivers who are ticked off, go trade your car that gets 10 miles per gallon in for one that gets 20, and you've reduced your cost usage by 50%.
Well, you sound like a president now. Thank you.
It's just a simple math. That's all I do. I'm a simple math.
But Toby, I don't have the job to go buy the car, baby. Come on. That's how we started this conversation.
Still, come on.
Thank you, Tobin. Always appreciate you coming on.